Hello everyone, and welcome to the first Sharesify podcast of the year. Well, actually, it's the first Sharesify podcast ever. It's a new business venture that a few of us are involved with. I'm Stephen Frazer, and I'm joined by my colleague Ian Conway. Hello, Ian. How are you?
Morning, Steve. All good, thanks, sir.
So, I mean, it's normally really quiet this time of year, as we all know, but there's been some surprisingly interesting snippets here and there, and we should really talk about the FTSE at 10,000. I mean, it closed there for the first time, I think, was it 2nd or 3rd of January. I mean, it just seems bizarre that the UK market has been so out of fashion for so long, and suddenly it seems to have gone from 8,000 to 10,000 in almost no time at all, Ian.
I know, Steve. Yeah, and it's been pretty broad-based as well. In fairness, a lot of fairly dull stocks. I was looking at Reckitt this morning because they
Yeah,
mentioned their buyback. That's up 25% last year.
yeah,
Out
yeah.
of the blue.
Yeah.
And this year, of course, of what's happened in Venezuela, defence stocks have been on the charge again.
Yes, yes, yeah. I mean, they've had a really nice long run, haven't they?
Absolutely. Yeah. So 10,000, I mean, it's a quite nice handle. I'm looking forward to and we're starting to get obviously some reports now from
Yeah,
companies
yeah,
about how Q4 went.
yeah,
We're
absolutely.
getting trading updates and so on.
Yeah, yeah. I mean, this time of year, it's obviously a deluge of retail updates, isn't it? About that important Christmas and run into Christmas period. And I know you've been scanning through many of these reports. I mean, what kind of stands out to you?
I mean, I think the key one has been Next, hasn't it? That came out on
Yeah, yeah,
Tuesday. Raised guidance, beat forecast, raised guidance again. That is a machine. That company,
yeah,
full price sales up 10% in the
yeah. I
quarter
mean, that
to
really is
the end of
outstanding, isn't it?
December.
I mean, 10%
I
is
mean, it
really
really is.
outstanding for
When the
such
high
a
street's
mature
struggling,
business.
yeah, I mean the high street's struggling. I don't know if you saw also this week, Claire's, the jewellers, that's gone into administration. So the high street is tough. And in fairness, bricks and mortar sales at Next were only up 3.5%. So that 10.5% mostly came from the online business and the
Yeah.
international, which went really well as well.
Yeah, and there's some stuff that's caught your eye for the coming couple of days as well. I think the food shoppers that seems to be something that's worth having a scan at.
Absolutely, Steve. Yeah, we've had the Kantar food grocery market share out, and it looks like it's been a bumper Christmas for all the food retailers. 13 billion pounds spent. That's the equivalent of 13.8 billion. So that's the equivalent of 475 quid for all of us, each one of us shopping over Christmas.
Yeah,
Um,
right.
that's a 3.8% increase on 2024, but inflation was 4.3%. So
Right.
actually, it's all prices. We're not
Yeah,
buying more, we're
yeah,
spending more. So the
yeah.
till
Well,
roll
actually, it
data is
sounds
the
like there's
value.
been actually a sort of an underlying belt tightening this year then.
Yeah, I mean, well, it's really interesting you say that because one of the things is the premium own brand premium. So
Yeah,
everybody does it. Tesco's has obviously
yeah,
got Finest, you've got Sainsbury's Taste of Difference, and the discounters do it as well.
yeah.
Sales hit £1 billion for the first time in that period. 90% of people bought a own brand premium product, which is
Right.
really
Okay.
interesting.
Yeah,
Um,
yeah.
we we got some indication of what. So this week we've got tomorrow we've got Marks and Tesco reporting their
Right.
Christmas sales, and on Friday we've got Sainsbury's. We
Yeah.
got a slight heads up on Tesco. Um, Kantar reckons that their sales were up 4.5% in the 12 weeks of 28th December.
Right.
That's usually a pretty good guide.
Right. Yeah.
Sainsbury's, we didn't get a figure, but what I did notice is that their market share has hit the highest since 2018. And
Right. Okay.
Sainsbury's, from my experience, tends to do quite well in Christmas and the New
Yeah.
Year. So
Yeah. Yeah.
Sainsbury's could be stronger.
Well, they might, but I mean, Tesco then might be the bit bear the brunt of this because we know that Lidl and Aldi, the two big discount German chains, have had really bumper Christmases as well. So if Sainsbury's is doing well and Lidl and Aldi are doing well, presumably Tesco, as the biggest supermarket in the nation, is going to be feeling the squeeze more than most. But we'll find out tomorrow, I guess.
Yeah, we will. I mean, 4.5% wouldn't be bad. It'd be better than the 3.8%, overall score. But Lidl's been growing double digits all through 2025. And again, it was like up 10% in the 4 weeks
Yeah,
over
yeah,
Christmas. The one I'm interested in is Ocado, not because I like Ocado or use it, but 50% of that business is owned by Marks and Spencer.
yeah,
And
yeah,
Marks
yeah,
and Spencer's now is pretty much a food business. Back in the day when it used to be a department store and food was a sort of add-on, it's now most of its sales come and most of its profits come from food. So I want to keep an eye on Marks tomorrow and see how that goes because Ocado has been doing very well as well.
yeah.
It's another one that's been growing double digits all year.
Yeah, I mean, speaking of food, I mean, something that's been catching my eye in the new year has been, of course, chips, but not the sort of chips that you
Yeah.
scrum down at the seaside. Seaside. These, are, of course, are microchips, which is an area I'm pretty well versed in, and some really interesting developments overnight. There was the big consumer electronics show in Las Vegas, and Jensen Huang, the CEO of Nvidia, superstar AI company that we all know. He made some quite interesting announcements, and one of the perhaps more interesting ones was his and a pay and a Alpamayo, I think it was called. Alpamayo, it's a new platform effectively aimed at self-driving cars, and that might put the wind a little bit up Tesla's sales because um,
Mm,
Elon Musk has invested an awful lot of energy and hype, dare we say, into Tesla being sort of the first fully self-driving car platform. So we'll see how that sort of plays out. The other interesting dynamics of TSMC, the world's biggest contract chip manufacturer out of Taiwan. They had knockout sales again, knockout revenues most recently, and its share price is now at an all-time high. So outstanding stuff. And the key message I think here for investors is that the underlying factors that have been driving this big AI bubble, as some people have been calling it, are still very robust. I mean, the demand levers are really strong, and it's supply that seems to be constrained still, not demand. So I
mm.
think for a lot of people who are really sweating over, how inflated is the AI bubble, it seems to me that there's an awful lot of very strong earnings and cash flow to prop up the current valuations in the market.
Mm. Well, thinking of tech, Steve, obviously, UK not known for its tech stocks, but a couple of them are going ex-dividend this week. People need to look out for that.
Yeah, yeah, nice little segue there, Ian, actually, because yeah, we covered. I know a lot of investors they like to be kept informed about when dividends are being paid and so on. And of course, what's a really important date is the ex-dividend date. So for anyone who doesn't know about ex-dividends, it's when you lose or the new investors lose the right to receive the next declared dividend. And this typically happens on a Thursday in the UK, maybe different days in overseas markets. So tomorrow is the first ex-dividend day of the year. And a company like Sage, for example, it's enterprise software, it's going ex-dividend. And it will effectively mean there's going to be a bit of a drag on the share price, about maybe 1.3% or so of the share price. But it's nothing necessarily to worry about. It's just something to be wary of, that it can sometimes upset the apple cart a little bit when it comes to FTSE 100, FTSE 250 kind of companies. So we've written a story about, why this works. It's on our website, sharesify.com. Listeners, come along and have a scan of the website and feel free to feedback, any constructive criticisms. We're going to wrap it up there because we don't want to drag on too long. So thanks very much to my colleague Ian Conway, Stephen Frazer here, and we're both from sharesify.com. Come and find us and look out for these podcasts. We hope to do 2, maybe 3 a week on an ad hoc basis. Cheerio until next time.
Cheerio.